Hey listeners, welcome to What's Up Legal, hosted by attorney Jeffrey J. Jinks. This podcast is where business law meets your community. So let's get started. Today's guest, Logan Grubbs from Midwest Bankers, right here in Carmel, Indiana. Logan talks to us about interest rates, where they are and where they're headed, and tons of ways to make your mortgage process a little less stressful.
Guest today, I can't wait to have you meet him and get to know him and learn about his business and how he can help you. Logan Grubbs, Midwest Bankers. I'm glad to have you here today.
Yep, thanks for having me.
We're just going to get into it here real quick. Logan, go ahead and let's start out by just trying to get to know each other. I know you well from our past business engagements and whatnot, but tell everybody where you're from and your family and that kind of a thing.
Okay. Yeah, I'm Logan Grubbs. I'm from Fishers, Indiana. Went to Hamilton Southeastern High School. I graduated Ball State in the spring of 2023. So
Chirp, chirp.
yeah, chirp, chirp. So been in the lending business, the mortgage business since January of 2024, which was a very, very interesting time to try to get into that. My family was kind of looking at me a little bit crazy,
Right.
Just the way that the market was at the time. Me really not knowing a whole lot at the time about it, and then being able to roll from there.
What'd you study in school?
So I studied, ironically enough, I had got a public relations degree.
Right.
But
Okay.
whenever I was in college, I had gone out and was doing door-to-door sales.
Oh my gosh, yeah.
So I
Yeah.
was working for, if you guys are familiar with Vivint Smart Home, I was one of those people that was knocking on your door trying to sell you some stuff. So you
Cool.
guys probably shoot me off here or there.
Okay,
A
that's
little
good
bit.
training.
So it's a little bit of a jack of all trades. So, being able to relate with people, represent a business properly, learning a sales skill, and then now hybriding all that into also a finance role is kind of where I'm at. So really the idea is just be a little bit of an entrepreneur with a little bit of a jack of all trades.
Oh, that's cool.
So
Cool. How did you tell me a little bit about your family? No kids, no marriage, no nothing. You're a single guy.
Yep. Just
Okay.
getting the ball rolling with life a little bit.
He's available. He's available.
Sure am. But yeah, so my parents, they are divorced, so I have a stepdad, stepmom on both sides, so it's a little bit of a big family. The holidays, you got to go to 3 different Thanksgivings, 3 different Christmases, so it's always just nonstop with them. My dad just got remarried in April of this past year down in Florida. They're actually getting ready to relocate down there to Fort Myers. This is all in the works right now.
Yes, that's where my parents live.
Yeah,
down there.
yeah, it's a great
Awesome.
area. Not a lot of tourists. I think they're really, really going to enjoy that. My mom and dad are from a small town southeast Indiana called Connersville. They're farmers. My mom is a teacher. She teaches 3rd grade. She's been a teacher for about 20 years or so. She talks to me like I'm a 3rd grader still. And then my
parents. You can't help it.
And my grandma was a principal for 30 years as well. So it's kind of embroidered in me to try to educate whenever I go along things. So I want to make sure that people understand what I'm saying, why I'm going around things, that sort of thing.
Well, in the lending business, there's a lot to teach people for sure. And
Yep.
before we got on camera, I was like, man, you've got to tell people what's going on in the market and what is happening, because every time you talk at our networking group, I'm like, I didn't know that. I thought I knew what was going on what was happening in lending. I thought I was abreast of a lot of it, but I'm not. There's so many things that you guys are doing, and your company specifically, that's a little bit different. So
yeah, it's the ball's always changing, or the ball's always moving. Things are always changing. New policies are getting implemented, especially right now.
Yeah,
and we'll kind of go into that a little bit. Go ahead.
Yeah, no, I'm kind of looking through my cheat sheet. Tell us a little bit about your current job at Midwest Bankers. What do you do exactly? I'm assuming that people are understanding, but they don't, for sure. And who do you like to work with as an ideal customer?
Okay, so it's a variety of different things. So being in my role as a loan officer at Midwest Bankers, I essentially run my own little business within the company. So I'm kind of like an entrepreneur in the sense of I go out, I make my own referral partners. I go out, I do my own marketing.
Sure.
Whenever people work through me, even though all the paperwork will say Midwest Bankers, you're really working through me, which is a very, very unique aspect, and that's what I really, really like about it.
Sure.
Because if people have a great experience because of me, if something bad happens, because of me. Not saying anything will, but
Right.
it's all gonna run through me. But I do a variety of different things. So I basically market a whole lot of through word of mouth right now.
Mm-hmm.
So that's just where I'm at in this stage of my career. So a lot of it is trying to get face to face, one-to-one with people, whether it be realtors, estate planners, accountants, financial advisors, whatever it may be. I want to get in front of you and tell you what I do and how I can try to help
Yes.
your clientele. Because especially being a brokerage, it gives me a lot of leeway to do so, because I'm able to shop through a variety of different banks, try to find a lot of unique scenarios that traditionally like your retail lenders wouldn't be able to offer.
So tell me, what's the difference between a broker and a retail lender? Because I think a lot of people just think I got a loan for my house. They don't even know.
Yeah.
They have no clue what you're
Yeah.
just talking about. That's great.
And this is very, very important, especially with the way that the market is set up right now. When you're dealing with the interest rates around the 6.5%, 7%, it's really a broker market. So between a brokerage and like a retail lender, if you go to a retail lender like Ruoff or Fairway or something like that, you're only getting their programs. So
Okay.
they're only going to have a conventional loan, one FHA loan, one investor loan.
So wait a minute. I would have thought that those were brokers just like you. No, because they don't say bank on the outside or credit union.
Mm-hmm.
That still is what you're calling a retail lender, and they have a specific product. Is that right?
Yeah, so they'll go through, they'll service their own loans.
Okay.
With us, we shop a variety of different, and you've seen me give presentations
Yeah.
and stuff before. I can just list you a handful. We work through like New Res or Caliber, what people are familiar, Rocket, Home Express. I mean, there's 30 of them. So what I do whenever I get a client is I'll punch it into a system that we have, and it will literally pull up all of the banks that we partner with on a list, and then from there I take my professional judgment to see what's going to get that borrower the best rate in terms, what's going to be best for their pockets, what's what they can qualify for, that sort of thing.
No, interesting. I didn't know that. I thought that only banks were like solo and everybody else was shopping the market, but that's a misconception. That's a big
It can be. Now some of them
market.
may do
Right.
different
Yeah.
things. But from my understanding, what I've experienced and some other loan officers that I've talked to,
Right.
that's what really separates us.
So what, when a client comes to you or is introduced to you, what's the first thing that they should know about to get, a good loan, to be a good candidate for you?
Yeah, so that's really going back into like my door-to-door days. It's the number one thing that's imprinted into me is just to qualify. You want to figure out, you want to just gather up, we're telling a story to an underwriter is essentially what we're doing. So I want to figure out, first of all, do you have a job? Do you have an income? That's always important.
That's number one.
Yeah, and I've worked on multiple scenarios, with like, I'm doing one right now down in Florida where, the guy gets, veterans disability, Social Security. So just being able to verify where the cash flow is coming in. That's the most important part. That's going to weigh into your debt to income a whole lot. FICO is a big
What's
factor.
FICO?
It's your credit score. Yeah, talking slang a little bit.
shop.
Yeah, so your credit score is the most important as well, and that's where I've gotten really, really sharp within my my time of doing this. Is being able to jump your score a quick 30, 40 points to get you into a better loan program. I would rather, as a lender, take an extra 2 to 3 weeks to get you in a position to get you in a better loan program than try to rush you in through an FHA program that really might not be in your best interest.
Right.
So that's the big aspect as well. And then just really figuring out where your liabilities are, like where is your money going.
Yeah.
So whenever I partner with like financial advisors, the way that I kind of tell them, I'm like, you manage the assets, I manage their debt.
Yeah.
So trying to figure out, how can we cut some debt to, higher that debt to income or lower that debt to income ratio. Just really try to see, there's a variety of different ways to play
You
it.
said another thing that's just surprising to me, Logan. Raising somebody's credit score. I was under the impression that a credit score would be kind of static for a pretty long period of time, it's not going to move much.
Mm-hmm.
But you just said sometimes I can move that needle quite a bit in a few weeks.
Mm-hmm.
Talk to us about that, because everybody knows that their
Yeah.
score is important,
Uh-huh.
but they wouldn't know what they can do to necessarily move it that far,
Yeah.
that quick. That's very surprising.
Yeah. So
That's very surprising. That's
yeah.
right.
So there's a variety of different scenarios. I'm just going to give you one
Yeah.
that I've done in the past where this lady had a collection on her credit report that she had no idea about. It's from like a cable bill from 2018.
Gotcha.
Just had no idea. We were able to identify it, give her the advisory to go in, log in, dispute it. I order a rescore just like that, and it took her from like a 620 to a 700, and then we got her into a USDA program.
Oh my gosh.
Yeah, just like that. I mean,
Wow.
but so obviously there's
Right.
there's some costs and stuff that go into it,
Yeah.
but it'll all be a part of like your closing costs and everything. But just being able to order, a rushed rescore and then getting her jumped up because she wasn't running approved eligible when she was at the 620,
Yes.
and being
right.
able to identify that was the issue, getting it done, and then still being able to close on time. It's just going that extra mile that
Right.
you don't really see a whole lot.
No, that's clever. That's very clever, and I think important
Mhm.
service that you provide, because most people are probably, I think they're like me, that they think, well, my credit score's whatever. I pay all my bills the same way every month, and what's
Yeah.
going to happen there?
Yeah.
No, that's pretty cool.
But
Very
people
cool.
come, the people have had a whole bunch of different, things happen to them, finances, switching jobs, COVID
Yes.
was a big thing as well.
Yes.
So really having someone on your team that can get that all fixed up in a timely manner, it's a very, very underrated aspect of this business.
Do people come to you with saying, I need you to bump my score somehow, or do they just come to you saying, I'm trying to buy that house? Which is first?
Typically they want to buy the house first because people
Right.
like to wake up and think, oh, I want to buy a house today. And
Right.
don't really have a whole lot of idea as to what really
How?
goes
Yeah.
what goes into it. And the first thing that I do is I'll collect the documentations that I need, the W-2s, the pay stubs, the bank statements, and just verify that you're a good client, like what you were
Yeah,
saying earlier.
yeah.
We're trying to identify that, and then once I pull the score based off that, that's where I'm like, and I always kind of lean towards doing a little fixing up.
Right.
Either way, so I don't really advertise or market like, hey, I'm going to fix up your credit, because
Right.
I could be, working for free a lot of the times.
Right.
But I will do it,
Right.
depending
yeah,
the
that's part of
scenario.
it. Yeah, no, definitely. Okay, before you got into the business, since I'm an old guy, that was a thing. People did like these credit repair, ideas, and that was like a whole industry. And I
Mhm.
think that kind of fell away. But I think that what you're talking about is making some adjustments that really can help people quickly
Mm-hmm.
to get requalified. That's really, I think that is very, very valuable.
Oh,
for
yeah.
you. Now, you did mention in your story there about the guy in Florida.
Mm-hmm.
Do you do loans all over, or is he moving here? Or
So-
do you do loans anywhere in the country?
Our shop is licensed in Indiana, Florida, and Colorado.
Okay.
So
All
those
right.
are those three states, and I really had a focus on growing some business in Florida, especially as my dad, as I mentioned,
Yes.
moving down there. So
Yeah.
I'd like to be able to go down there, from December to January, and still,
Right.
keep the machine running. So
No,
that
that's
was
awesome. No, I wish you the luck in there, because there's a lot of people from Indianapolis and the Midwest that go to Florida,
Mhm.
and that's a good market. Vacation homes,
Mhm.
as well as a second home for
Mhm.
getting a loan, or the place back here. Either one. It's
Yeah,
kind of cool.
and there's a bunch of different ways to go about that too.
Let me ask you. Yeah, there is for sure. I want to pivot for a second over to the market now, and kind of come back to this idea that you guys are doing some really cool things. There's a lot happening, and I think you brought your laptop because you guys put out a newsletter.
Yep.
Is that monthly or weekly, or what is that?
So I started doing this at the beginning of 2025.
Okay.
This is something that I do with the network that I've built
Okay.
over the
It's
last
not
year.
proprietary to the company. It's yours totally.
This is completely me. I design it, I write it,
That's
I
awesome.
research, and I send it out to the people that I've met over the last year that I think would be valuable to, whether it be clients that I've served, or just referral partners as well.
Okay. So tell us, tell the audience what you think is important now. We're here right now. This is the end of January, 1st of February, excuse me, in 2025. And there's a lot going on in the market. We have a new administration. We've got some interest rate movement. Tell everybody what is going on that you think is important that they need to know about.
Yep.
Please.
And I'm going to kind of tailor this to what you said some of your clientele was.
Yeah.
He said that he works with a lot of real estate investors. So a big one is HUD is implementing some changes to the home tenant-based assistance program. Basically, it's cut it down where your leases that you sign with your clients are going to be a lot more cut and dry, and it's not going to be a whole lot of fluff. So like if you get into a situation with a renter where something was hidden in the lease and they just want to make a big fuss about it, you go to court and you got to get Mr. Jinx involved.
Yeah.
That they're trying to make it a lot more cut and dry. Like it's going to be very, very simple for both parties involved. A big one as well, and I've dealt with this a lot just in my office, and some other loan officers I work with have been kind of frustrated about it. But there's going to be some new mortgage lending practices as well. There is a committee that is looking to get rid of trigger leads. So a big thing, whenever we pull credit for someone that's applying for a mortgage, that gets released into some sort of database.
Okay.
And lenders from all across the country can just call your phone up night and day, knowing that you're going to
just a car loan even will get you 100 calls.
And there's been some policies that are in the works to get that abolished. So A, it's going to protect consumers, so then you're not just being solicited to all the time, and B, it's going to protect us other lenders, just knowing that people aren't just trying to hammer our clients all the time,
right?
Which is pretty relieving. But there was some another big lending decision, which this has been implemented for a couple months now. This is really interesting because I've ran into some scenarios with people that this would have been nice a couple months ago.
Yeah.
But medical bills will no longer play in to your debt to income ratio.
Oh wow, okay.
So that's huge, because if you talk to somebody that had some sort of freak accident, I think of people around my age too, in their early 20s, like they get 26 to 28 and they don't exactly have health insurance.
Right.
Something happens, a $20,000 bill could feel like the end of the world.
Sure.
But now this isn't going to factor into your qualifications to buying a home.
Nice.
Which is very, very relieving, I would say.
Yes, yeah, no.
Now, then the big thing is there's been a lot of fuss about the inventory in the country.
Yeah.
There's all
big
these...
time. That's been really big.
Yeah, and so we're expecting almost about a 14% increase in the start of new family homes. So you're going to see bunch of neighborhoods. I was driving over here and I saw a bunch of them right over here on 96 where they're doing all that construction.
Yeah.
So
right around the corner.
Oh yeah.
I know.
And you're going to see a lot more of that going around. And those are very, very good homes. They get the right materials. They put them up in an efficient way. They're safe neighborhoods. I mean, they're.
Do you have a specialty dealing with? I mean, as a lender, does it matter to you if it's a new home or existing?
Does not really
Doesn't matter. Okay.
It's really nice working with some of the builders, because they do have some really, really good programs where they'll help you buy down the interest rates and try to make it easy for the consumer. But a lot of the times, and I get some business from it, from these new builds, because a lot of times if they're not a picture perfect loan, like a 2-year W-2, good income, they can't do the loan sometimes.
Right.
It's not picture perfect, and they'll refer them over to us. We fix them up a little bit. We do the loan for them, and we still get all those concessions too.
Right.
So even if you're going to go buy a new build home, you don't necessarily have to use the in-house lending that they offer, but you'll still get some of the concessions as well, which is really, really important information.
So call Logan in the middle of that. No, definitely don't lock that in.
Yeah.
I would think that a fair number of borrowers would feel the pressure to use the in-house lender from a builder.
Just because it's there.
Because they're right there and they're thinking, but that's maybe not a good approach.
I wouldn't say that they're bad by any means.
No, definitely not. I'm not disparaging that, but not thinking that there's an option. I mean, it's like, where do I go next? It's like, oh, I have to do a lot more work. You just call one person and you can shop that to the market and maybe help the deal come together for the builder.
Yeah, and especially like what we were talking about earlier, where if you came to me, a month or two ago, and I got you all fixed up, and then you go and look at a new build home, they're gonna try to,
Scoop you.
Yeah, right then and there. But there's been some good stuff going on in the market, and there's one more thing that I want to say on this.
No, please do.
Which has been kind of exciting news, especially for us that are working within the industry, is that the Indianapolis, Carmel, and Anderson metropolitan area is anticipated to be the second hottest real estate area in the United States this year.
Repeat the cities.
It's Carmel, Anderson, that in between.
That's the one I was stopping you on. I was like, wait a second. Anderson is in that group now.
It is. Because a lot of that building is going north.
Yes.
And they're going to, hopefully try to revamp some of those car factories and stuff.
Yeah.
I think that was a big thing of what President Trump was saying, trying to bring back a lot of like the, automobile manufacturing. So we could see that community really be revamped.
No, I'm not surprised to hear that, but I am, because I had a client that was building out there between Fishers and Anderson. And I'm trying to think of a community, but it should have just exploded. But it was like 15 years ago. It was too early. And then so the builder just made rentals out of a few of his models, and the rest of the area was nothing. But as I was talking to him, he's like, this is only 10 minutes by highway to Fishers. This is only 15 minutes to Carmel. This is only 20 minutes to Castleton. You can be downtown Indy, because the highways so quickly from Anderson, or you can have like that suburban feel, small town feel, and similar to how Fountain Square area grew downtown. It exploded. And when I was a puppy as a lawyer, Fountain Square area, that was a very dangerous spot in the city. And I kept saying to people, why isn't this the number one neighborhood in the city of Indianapolis? It's right next to Lilly. It's next to everything downtown. It had all of that geography, and it just hadn't popped yet. So when I heard you just say Anderson, I'm like, that's for real. That's, it's just like the next exit up, and they've already got the infrastructure for the city there for you. Whereas it's not just another subdivision. It's the city's there. Just keep going.
Yeah. So if the investors are listening,
definitely. Buy anything between here and Anderson. Just like buy anything from here to Lafayette or to Chicago now, because Lebanon and that whole area,
booming too.
It's just booming all the way up through Lafayette. You can't stop it. So keep going. You can't. There's a lot of strength in that core economies, and I agree with you. It's a lot of those factories have been repurposed. Nestle's up there and other places are, maybe not cars, but it's gonna be something, right? They got good stuff.
Yeah.
Sorry, I didn't want to. That's a little rabbit trail for me, but I love hearing that because I've got friends from Anderson that I grew up with, and that was really a thriving community. I think it could be really fantastic going forward.
Yeah.
Yeah. Sorry. Okay.
Yeah. You good?
No.
What next?
Let me pivot for a second about the, some of the influences in your life, and what would you recommend to somebody getting into the business for mentorship, or who you've worked with, or just different skills that would be important besides being able to knock on 1,000 doors. That's a good one. I did a door-to-door sales business when I was in college, and it made the biggest difference of just putting yourself out there.
I mean, you just learned how to say no to. Not a lot of people are very receptive to that.
Yeah.
But the reason that I got into this is because my best friend's dad was a lender, and he was my next door neighbor growing up. And it didn't really like sit with me until I was older, because I didn't really. You're not really looking for that stuff when you're a kid. It didn't really make any sense, but I just understood it. I was like, well, he's got a nice house. He's got a lake house.
Yeah.
He gets to play golf with, pretty frequently. He's going to ball games. And like, these are the things that I want to do.
Yeah.
And so I reached out to him. We grabbed some coffee, and then he introduced me to a couple people.
Cool.
And from there, I talked to a couple of loan officers, and I thought that Midwest Bankers was the best scenario given the market. Because as I mentioned earlier, when these rates are at the 6-7%, I mean, those half percentage, those quarters of a percentages, you know, that could be the altering factor of, you know, getting a loan done. So that was
explain that a little bit to the consumer, because I have talked to other lenders that mention that, and economists will say, well, for every quarter of a point in the interest rate, that's more or fewer buyers. How does that work?
I don't really understand exactly how what you're saying. I'm just more thinking of like, you know, a budget scenario where it's like, okay, you only wanted to pay $1,800 for a mortgage, but you know, if you were to go to another lender and they quoted you at 7%, and then I was able to quote you at 6.5%, that gets you into the $270,000 house versus the $250,000 house.
Right.
Just little things like that.
No, definitely. That's where I was headed. That's definitely where I was headed. But just that small difference can make a huge payment difference.
And I'm going through it right now. I'm shopping for my first home as we speak, and I was I pre-approved myself actually this morning because which is funny because I'm looking to put an offer in on a place here in the next month or so. Yeah. And just really running the numbers is like, you know, the difference between a 6.5% interest rate and a 6.25%. I mean, it's almost $150 in my budget. You know, it makes a difference. You know, that's another night out. You know, dinner. You know, some things at the it means a whole lot. So
I know a night out for you also includes the Indiana Pacers.
Sure does. Sure does.
You've been a lifelong fan.
Yes, that is correct.
Cool.
Yeah, that and a Colts fan as well. So my dad was a season ticket holder for the whole Manning era. So you know he was skipping birthdays and whatever to go make sure that they were getting wins on Sundays. Which it's just
no, that's pretty cool.
But and so that was just kind of engraved in me from a young age. And you know, there's a little bit of passion, and it's a great way to just get out, socialize. I love people watching, hearing a crowd pop, watching, you know, people, especially when they win. It means a whole lot to the city. You know, people coming out
for sure,
getting a little economic spike going on. I'm a big fan of it.
No, definitely. I had an office downtown across the street from the field house, and every time there was a game, it was like the crowds were there, the energy was there. It was really fun. I love the Pacers as well, but I love basketball in general. But I used to go when they were at the Coliseum, at the fairgrounds when I was a baby. And my dad would take me to those games, and it's, you know, of course it's more magnificent now, but it's the same idea, the same, you know, love of the game. It's pretty cool. Yeah. And it's nice to have a pro team like that.
I believe the Beatles played there.
What?
At the Pepsi Coliseum.
I didn't know that.
Oh yeah, look it up. There's you can dig online. They put it. I promise you.
That's pretty incredible.
Yeah, and that's the other thing. So that was a big reason like why I moved back home. Like I'm a huge history buff with the city. Like just knowing little facts like that. And that's why I really wanted to help serve this community specifically.
No, cool. And you'll go anywhere basically. You'll go Anderson. You'll go wherever.
That's what's really nice about being on the lending side of things is I'm not like the realtor where I'm in the car driving you to a whole bunch of different places. You call my phone any time of day. If I don't answer you, I'm either dead, sick, or in jail. Yeah. And then I'm calling Joe Chance.
Let's not call that. Yeah.
But I'm at the office, you know, most of the day. If not, I'm doing, you know, a lunch meeting, coffee meeting, whatever it may be. But for the most part, I'm in there originating. I have my resources in front of me. If you have a question, if I don't know off the top of my head, give me 30 seconds. I'll find an answer for you. That sort of thing.
No, very cool.
But yes, all over the state of Indiana.
Plus Colorado, Florida, right?
Yeah.
That's big. A lot of people have places in Colorado from here. That's a you know, ski resort place.
Yep.
My nephews live out there, and I've got 3 nephews that live in Colorado. I'm like, wait a second, I love it out there. Let me hit you with the investor question. What do you do for investor loans? Can you? What kind of products are out there now, other than what we were talking about with HUD? Just let's close the loop on that a little bit. Because I know you've talked about investors you've worked with in the past.
Yeah, so a lot of the investors that I work with, the hot commodity with that right now is the debt service loans. Everybody knows all about them. That is all that.
No, they don't. Tell them what that means.
So it's a debt service coverage ratio. So basically, what it is you are qualifying based off of a mortgage payment and the difference of like what you're charging for rent. So there's a little ratio between the two, and that's what we're qualifying you off of. So depending on what the 10-7 appraisal says on what you can charge for rent versus the qualification for the mortgage, that's the hot commodity right now.
What's the 10-7?
So it's a type of inspection that gets done. They don't tell you. That'll tell you what all the properties around you are being rented for. So it'll give you kind of like a comparison or like a comps
and that comes through your lending software?
So no, it's part of it's an inspection that we have to order third party whenever we get a loan. But based off of that, that's going to be a big factor into the qualification for it. But where I want to go into it with this is the way that our business is set up is these banks solicit to us because they want us to take their loans to them. And whenever I tell you my email inbox is filled with these people advertising these debt service loans, that's what it is because we're qualified. It's a no income loan.
Gotcha.
So we don't qualify based off of the income. Now you got to have good credit. You got to have investor experience. Even if you rented a home 10 years ago, that would still count. But and you need to have the funds split down because if you stake 25 or 20 to 25% into that loan, you're gonna pay it back, and that's really what they're looking for. But there's a lot of different ways to go about them. There's unique scenarios, unique different houses that you have to, manufactured homes are tricky. Single family homes, the condos, there's certain things. There's different versions of these programs that'll go into it as well.
That's very cool. That's a sophisticated product.
It is.
Yeah, but about 20-25% down probably is you're still going to need that.
That's the big thing, and just along with any other investment property, you're going to have to pay 2% on your property taxes, or 4%. Whatever it is, it's double. Yeah,
it's 2.
Yeah. So there's other things that go into it, but they're really good programs. And that's where we're also very competitive is, being able to shop like the 30 different banks that are showing us this, because whenever I was talking about that, 1/4% or 0.5%, investor clients, those are the ones that are very, very sensitive because it's all about those margins. So if if you're interested in that sort of stuff, getting multiple quotes,
how many units could you do like that?
So I have a lender. It's funny that you asked that. And I was going to try to hint into this as well. So I could do up to an apartment building.
Oh, really?
Yeah. So
an
I can
apartment building with how many apartments?
I think it
like 100.
Off the top of my
20.
head, I think it was 20 units.
Okay.
But I do. Our company does have commercial lending as well.
Okay.
So if you're wanting to do like mall strips, office buildings, nail salons, like that sort of stuff. I just did a nail salon too. So the variety of different stuff. It's
surprising. That's surprising me. That's good. No, that's awesome.
Yeah,
I really appreciate that.
Really, the biggest thing is just like any lending scenario under the sun, I can find a way to get it done. That's what's so unique about our company. Is even if we don't have a bank that offers that, we'll go sign up with one that does. To try to mesh the scenario. So
very cool. What else do you want to say before we sign off? I think you covered a lot. You covered a lot of good stuff. It's really neat, and it's a great resource with the business. I always ask people this: are you guys, you personally as an entrepreneur, is it part of your business plan that you would bring people on under you or not? Or is that not?
That's your 3 goals.
Your 3 goals? Okay.
Your 3 goals, yep.
Okay.
So I've checked a lot of my boxes thus far. It doesn't really seem like it, but I kind of have. So the goal was, obviously I wanted to graduate college. In 4 years. Did that successfully. Did that successfully. I wanted to get my lending license. I did that. On time. I had passed my test the first time I took it. So would like to think I'm pretty knowledgeable about the stuff. The new.
It's not as easy as people think. It's a lot. Finance is not easy.
Yeah, knowing the Fannie and Freddie guidelines, knowing the lending laws, like all that sort of stuff. It's a lot of information. But I did pretty well my very first year.
Good.
Which is
good. No.
Which is very exciting. And then now I'm trying to double what I did last year. This year, and then year 3, I want to get my own assistant, and then really start getting the ball moving.
Awesome.
So that's
how do people get in touch with you?
my mobile number is the best. I will give you. I'll leave you some business cards.
Right.
In here, I'm on Facebook, Logan Grubbs. You can look it up. All my stuff will be on there as well.
Okay.
Yeah. That's
Phone number.
Oh yeah. 317
Yeah.
605 3217.
Yeah. Fingers and toes.
Yeah, there we go.
No, that's cool. No, that's excellent. I just want to be sure that people can get to you. We're going to have your business card and your logo and all that kind of stuff at the beginning of the podcast and at the end, so people have that easily accessible. But I always like to say, please call Logan. He does a great job. And he's a part of a special network that I'm in for passing leads, and everybody's always going back and forth with him on stuff. I found him very knowledgeable. That's why I wanted him on the podcast, because he brings a different perspective than what I normally hear from bankers and other lenders. So I think you do have a great program.
Mm-hmm.
People could benefit from your service quite a bit, and it's worth a second opinion, right? So if you're having difficulty, or if you think you've just got an easy loan but you want to work with a great guy, I recommend Logan. All right. Thanks, everybody. Appreciate being together and hope you got a lot out of this. Send us any kind of comments and also give Logan a call. Thank you so much.
Thanks for having me.
All right, man. Thank you.
Yep.
All right.
Thanks for watching the What's Up Legal podcast. Don't forget to like and subscribe. You can also check out our website at www.jeffjinkslaw.com. That's JEFFJINKSLAW. Instagram or Facebook at Jeff Jinks Law. We appreciate your support, and we'll see you next time.